Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Bitcoin's price action over the past few days has been fascinating, yet nerve-wracking for traders. The yellow X signal has appeared 3 times on the 1-hour time frame, signaling significant market activity. For those unfamiliar, the yellow X is a bearish indicator triggered by a combination of a bearish wave cross, negative money flow, and an oversold wave trend reading below -40. It often reflects broader market behavior, such as high-volume long covering or whale manipulation. This manipulation is usually designed to trap breakout traders into bad positions before driving the market lower to collect liquidity. Historically, these yellow X levels have been orchestrated by market makers to push prices artificially lower. But here's the interesting part. After this manipulation, we typically see a rebound move back to these levels, driven by natural market demand. So while the yellow X may look intimidating, it has also signaled opportunities for savvy traders who understand the mechanics at play. Adding to the intrigue, Bitcoin has now tested the $92,000 level 3 times already. This is a dangerous play because, as we know, the more often a level is tested to the downside, the higher the likelihood it breaks. But don't fear. While this pattern suggests potential danger, it also sets the stage for significant movement in either direction. Now let's take a closer look at the liquidation heat maps. On the 3-day liquidation heat map, there's a clear hot pocket of late shorts opened just yesterday, around $98,400. These positions were taken with high leverage, betting on further downside. Below this level, liquidity is thinning out significantly. This thinning of liquidity suggests there isn't much incentive for market makers to push prices dramatically lower without a specific target in sight. Switching to the 2-week heat map, the picture becomes even more nuanced. The price action has already collected the hottest area of long liquidation leverage at $91,200 with a fast wick to $91,100. There are smaller long liquidation pockets nearby at $90,600. If the market makers decided to sweep these levels, it could lead to a dramatic cascade of liquidations down to $89,900. Here's why that would be a critical event. Breaking down to $89,900 would also mean breaching the last resort support levels that held strong in previous tests. The first of these is the November 27th wick at $90,800, followed by the infamous scam wick on December 6th. If these levels are breached, we could see a ripple effect of fear across the market. Prices could tumble into the 80s or even 70s, triggering widespread panic among retail traders. That scenario, however, is highly unfavorable, not just for traders, but also for market makers themselves. Remember, market makers rely on liquidity. If fear drives prices too low, liquidity dries up, making it harder for them to operate profitably. So while the possibility exists, it's unlikely that we'll see prices push much lower without a strategic reason. In my opinion, we've likely bottomed out here at $92,000. The rebound we've seen after touching this level suggests strong demand, but only time will tell if this holds true. For now, I remain cautiously optimistic. Zooming out, let's consider the broader implications for altcoins. Many traders, myself included, are talking about an upcoming alt season. But for altcoins to rally, Bitcoin needs to lead the way. Altcoins thrive when Bitcoin dominance is falling and the price is rising. And guess what? The dominance chart is already in a downturn. This could set the stage for the kind of pump we've been waiting for, where both Bitcoin and altcoins surge together. This brings us back to the potential path forward. On a macro level, Bitcoin still has its sights set on $100,000. The 2-week heat map shows a much hotter liquidation pocket around that level, making it a lucrative target for market makers. If we manage to break above the current resistance zones, this pocket could act as a magnet, pulling prices upward in the coming weeks. So, what's my take? I believe we are on the verge of a significant move. Whether it's a clean breakout or a quick shakeout to collect liquidity before heading higher, the pieces are falling into place for Bitcoin to make a decisive push. Join my Discord for deeper analysis and real-time updates. Drop a comment below. It helps with the algorithm. Like the video if you found this valuable, And don't forget to subscribe and click the bell icon to stay ahead of the market. And see you in the next one.